Hello all, this is Chartered Accountant Omkar Garge. So we are here to discuss the proposed provisions under the Budget 2025 under the Goods and Services Tax laws. Well, although the most surprising part today was that during the budget speech of the Honorable Finance Minister, we did not really hear about anything about the changes in GST laws. Whereas when the bill was accessed later on, we could actually see that there are a few amendments which have been made, and we will be discussing them one by one. Now, for the first to start with, the focus we have kept more on the ISD provisions. The reason being that since the ISD has been seeing a lot of changes from the right from the 50th GST Council meeting, the 50th, the 51st, and 52nd GST Council meeting had a lot of focus on the compulsiveness of the input service distributor provision. Thereafter, we also had a circular whereby the fact that the input service distributor distribution of input tax credit for the distinct person was not compulsory since the provisions of ISD were having some lacunas then. The amendment was made in the budget 2024 where the compulsiveness of the ISD registration was brought into picture. Although the effective date from which the ISD provisions will be made mandatorily applicable was somewhere not very clear. So, although the provisions have been made clear that the introduction of the word shall was made very much clearly in the provisions of section 20, whereby the ISD distribution shall be happening with respect, with the help of the ISD invoices. Here now the full-fledged endorsement possibly now comes that with effect from 1st of April 2025, the provisions of ISD would become mandatory, and how the distribution of credit is to take place. The rules are already in place. Maybe some changes in the rules may also be made in to bring it in line with the particularly the provisions which will now be effective. The first change which we will be discussing is the provisions, the minor change which has been made in the definition of a input service distributor. Now, where the input service distributor typically was meaning the same, that is the office of the supplier of services or goods, who receives the invoices towards the receipt of input service, including invoice in respect of input services liable to tax under section 3 and subsection 4 of section 9. वहाँ पे till now what was happening was that the reverse charge mechanism transactions, particularly by way of an interstate supply, were missing out from this the gamut of this distributor definition. And this insertion now which has been proposed with the Finance Bill 2025, the horizon of the definition has been slightly extended to say that the transactions under reverse charge under 9 subsection 3 and 4 as well as 5 subsection 3 and 4 will also be now covered under this. Now, so obviously the impact is that, okay, one is that it is covering the interstate inward supplies of the reverse charge transactions, and the distribution of the same via the ISD mechanism would be done. Now, I have a slight concern over here because of a specification that we will come to the discussion about. Now, what that specification that, and as we also discussed the same part that, okay, 1/4/2025 happens to be the date for the date particularly, for this ISD implications being made mandatory, or the cross charge per se will now be having will have a limited aspect towards the internally generated inward supply of services, will be only restricted to the cross charge, whereas the third party service provider services received will be distributed through the ISD. Now, the fact of the matter is that this aspect was already clarified via the circular and the amendment made in 2024. However, the fact that whether the distribution process to start with on a compulsive basis through this was somewhere missing, and I think now 1/4/2025 largely sounds as the date from which we have to do it compulsorily. So, in a nutshell, internally generated services, if they are there, we'll distribute it through the cross charge. Third party service provider exists, that is from any vendor who is providing services to you. Earlier it was covering services under forward charge, services under reverse charge on intra-state basis. This definition and also the section 20 amendment makes it clear that even the interstate inward supplies on which the tax is payable on RCM basis can be distributed through this ISD. Now friends, the only practical challenge which we really came across was the ISD registration on the GST portal has the facility of payment, but that payment is limited to only making the payment in respect of the late fees under the law. However, the ISD in itself does not have a mechanism to pay the tax. So one question was really bothering my mind as to how the RCM credit will be distributed by the ISD, because in my 6A I will be able to see the inward supplies reported by my suppliers who are paying tax under forward charge. Possibly the those supplies which are reported by the suppliers who are making asking me to pay the tax under reverse charge. But the practical challenge is that under the ISD registration I cannot pay any tax currently, because the portal allows you to make only the cash payment towards the late fees. Likewise, on interstate supplies, suppose I am talking about, now we are going to specifically refer to this example number 4 over here, that is the cloud space services for central data server, which is used by the entire company. So this example particularly is what is there that we are taking into consideration. If a entity has 5 registrations across India, if they are taking the central server services of from any, let's say, online cloud space services provider, we have a case of import of services here. We do not have anybody uploading any data that we are receiving the services and liable to pay under reverse charge. And the third thing that we discussed, that the ISD in itself does not have any mechanism of tax payment. In the light of this fact, how do we really say that the ISD will claim the credit and distribute this RCM credit? Now, of course, this mechanism is something which we particularly feel needs to be brought in. Or currently, the regular registration in the state where ISD registration exists will actually have to receive this service, claim the credit, then the regular registration will have to issue an invoice to the ISD, and then ISD will issue it to the corresponding other registrations. Because direct distribution of credit will be possible only when the credit is firstly coming into ISD. Now, since the ISD has a payment limitation, then how this RCM will be availed and distributed is something that needs a bit of clarity, is what I strongly believe. The rest of the mechanism of ISD has been existing. The distribution mechanism also exists, that may be on some logical equitable basis, on actual turnover, I mean on the basis of the actual consumption of service, if the ratio is known, where a specific state does not receive a common service but only the rest of them receive, then the distribution will happen in that way. That is what is there as a part of this discussion, or that is there as a part of this illustration. While I'll be also uploading the relevant PDF so it can be accessed, or this presentation can be accessed. So I'm limiting the discussion for the sake of brevity only to the point number 4 over here. So the few key points that, as we discussed, are here about the ISD, that okay, 1/4/2025 happens to be the date on which we really look forward to, that the ISD becomes compulsory from in all its aspects, in all aspects and in all practicality. Internally generated services can be continued to be done through the cross charge, and the externally received services for common consumption should be now routed through only the ISD returns. And therefore this registration, if somebody has not taken, it is high time that the ISD registration is taken for common services and claim consumption and distribution. Now, as far as the older issues for the ISD and cross charge, or if there have been say queries raised by the department that why ISD was not taken, I think that was very much done away with the circular issued back in 2024. In the light of this fact, now going forward prospectively, we are going to have this segregation for transfer of the credits on the basis of internally generated services and externally received services. Internally will be done through cross charge, externally will go through the ISD mechanism. Next, we discuss the provisions regarding the definition of 2 subsection 69 in what is a local authority, in specific municipal committee, Zilla Parishad, district board, etc. Here the only limited extension that has been done is the word municipal, the word in section 2 subsection 69 was any government, central government or state government with the control management of a municipal or a local fund, or local fund, that is how it was placed. Now it has been extended to mention that a municipal fund or a local fund, just to ensure that the segregation of this local fund and the municipal fund, beg your pardon, happens to be very specifically, whereas local fund has been given a specific meaning. Likewise, municipal fund is also going to be given a specific meaning by virtue of this addition which has been made. So not more than this, any significant thing that we wish to discuss on this, and then we move to the next one. Now, vouchers, the supply by way of supply of vouchers has been declared to be a Schedule 3 transaction, or it is considered to be a neither supply of goods nor supply of services. This happened again in the previous previous council meetings, and followed by that, a circular which was issued on 31st of December 2024 made it clear that the transaction in supply of vouchers will no more be considered as a supply of goods or supply of services, because it is more akin to a transaction in money. Likewise, the time of supply provisions relating to the supply of vouchers under goods and services under section 12.4 and 13.4 have now been omitted. Well, not many were surprised, but of course, this is some sort of a shock what the trade is going to take tonight. That the provisions of section 17.5 subsection 17 subsection 5 clause D, vis-a-vis the explanation of the words plant and machinery, as it was clearly vitiated during the the detailed judgment which was given by the Honorable Supreme Court in the case of Messrs. Safari Retreats. Whereas the emphasis was made on whether plant or machinery can be considered as plant or machinery in itself, as it was there in the law, and where the building could have been considered as a plant or machinery, basis which the credit eligibility could have been defined, in order to really cut out the very principles which were laid down in the judgment. In the 55th council meeting, in the press conference, it was very categorically expressed by the honorable members of the GST council that the word plant or machinery was placed only by way of a drafting error, but for all practical purposes it will always mean plant and machinery and not plant or machinery. And therefore this drafting error was really demeaning the entire purpose of the judgment and the effort which was put behind the judgment in the case of Messrs. Safari Retreats. Well, all said and done, now that the provisions of section 17 subsection 5 are particularly stating to be amended to mention that for the purpose of clause D, it is hereby clarified that notwithstanding anything contained to the contrary contained in any judgment, decree, so and so, any reference to plant or machinery shall be construed and shall always be deemed to have been construed as a reference to plant and machinery, and therefore this, as we mentioned, that the victory is only in history now, because the Safari Retreat judgment stands possibly annulled going further. To be very honest, this really gives a shocker, because there was only a glimpse of hope which was there in the eyes of people who were dealing with this scenario, especially with respect to malls and the commercial spaces. But as we stand today, harshly enough, this credit will not be allowed any further, and it has never been considered to be allowed from the inception of the GST law. Friends, the next provision is very specifically in relation to the credit notes under GST. Now, particularly, there have been a lot of issues where the department has been raising concerns that if the outward liability was reduced by the supplier on the basis of credit note issued, whether the recipient has also reversed the input tax or not, and based on which the queries were raised. Now, actually, क्या हो रहा था कि there was no cross confirmation mechanism whether the supplier has whether the recipient has really reversed the input tax credit in respect of the credit note which has been issued by the supplier. Now, there are a lot of aspects. Now, there was a delinking of credit notes which was earlier existing. So, supplier could simply issue a B2B credit note to the recipient. Recipient was able to see it and is still able to see it in the GSTR 2B, and basis which the recipient is supposed to reverse the input tax credit. Now, what the proposed provision says that the outward liability will be allowed to be reduced now shall be adjusted in such manner as may be prescribed. Proviso inserted says, provided that no reduction in output tax liability of the supplier shall be permitted if the input tax credit is attributable to the credit note, if which has been availed has not been reversed by the recipient, where such recipient is a registered person. Meaning thereby, if the B2B outward supply is made to a person, if a credit note is issued subsequently to such person, and if the credit note entails the reduction of outward tax liability, then now it says that there has to be a presupposition that the reduction of output tax liability will be only subject to the confirmation that the recipient has reversed the input tax credit. Now, in two cases, in even the amendments that we will discuss about section 38, about the auto generated statement that has been now rephrased to say a generated statement, there is a possibility that the GSTR 2B will be now again a cross communicative sort of a return, which was originally thought in the original framework of GSTR 123 which was there at the beginning of GST law. So possibly the recipient has to now communicate, accept, reject, modify with respect to the inward supply of invoices, inward received credit note, debit notes, etc. And only on the confirmation given by the recipient, possibly the reduction of output tax liability will be permissible. Now, of course, whether it really happens on a real-time basis, whether it happens on the basis of a window which is being provided for doing this entire changes, etc., this is what we will have to look forward to in order to make these changes. Now, the next, the existing provision about section 38, as we discussed, that the only proposed provision part of this particular provision over here is that the details of outward supplies furnished by the registered person under subsection 1 of section 37 and such other supplies as may be prescribed, and a statement containing the details of particular. Now over here, if you see, and an auto generated statement is what was there in the existing provisions, in the earlier provision, which is now standing to state that it a statement containing. So possibly, as we discussed even just a minute back, that there might be a scenario that this GSTR 2B will be now made an active communicative return sort of a thing, whereby the recipient will have to accept, reject, modify, communicate it back to the supplier, and before the entire 3B is finalized, I believe this is how the return will stand modified to that extent, or this return figures will be required to be modified to that extent. So this is something that we are looking forward to exactly what happens. Same way, the provisions for 30th subsection 2, and so wherever the word the auto generated statement, over here also the specifications or of what will be there in the GSTR 2B has been considered, that the details of supplies in respect of which the credit cannot be availed, the details of supplies in which credit can be availed by the recipient, including on account of the details of said supplies being furnished. So again, this provision is only to give a hint as to some potential changes which will be brought in the GSTR 1 also, as well as in the GSTR 2B, which is generated statement, named as generated statement rather from an auto generated statement. So there's a possibility that the original matrix will be possibly tried to just getting reframed vis-a-vis the return filing mechanism is concerned. Of course, this looks like it is going to achieve the originally envisaged objective, and therefore, if the portal functions with the nuances introduced, this will be a welcome move for sure. As far as the GSTR 3B amendment, I mean the amendment in section 39 is concerned, there is only one simple thing which has been mentioned, that this registered person is required to file a return other than a TCS, TDS, TCS deductor, or other than ISD, other than composition tax person, electronically of inwards and outward supplies of services or goods or both, input tax credit availed, the tax paid, and such other particulars in such form and manner within such time and subject to such conditions and restrictions as may be prescribed. Now here there is a possibility, what we have even considered as a part of impact, that maybe in the GSTR 3B also there will be some conditional based filing of returns permitted. Maybe the outward supply validation will be increased a step further, the input tax credit validation will be increased to a step further, so that genuinely the ITC availment happens, genuinely the outward tax liability is net tax liability is determined, and the cash payment is done accordingly, and only then a proper valid return will be allowed to be filed. Now of course this is too vague to really go on to any specification as to how this possibly could happen, but the expectation is that there will be some sort of a change in the returns mechanism. One change, surprisingly, but of course recently it has been observed widely, that a lot of cases the orders passed under DRC 07 were conclusive to state that the tax and interest is not applicable. However, the penalties were getting confirmed in few of the cases. Now friends, of course ये केस में क्या होने वाला है, that now if there is an appeal to be filed where only penalty is being challenged, or the penalty is being aside, for that matter the order is only aside to the extent of penalty which was levied, there is a pre-deposit. Earlier the pre-deposit was not required to be made if the case was inclusive of, I mean if the case was only for a penalty, because the provision read earlier was the 10% of the tax includes, I mean the tax, interest and penalty. Now what it says is, provided in case of an order, any order demanding the penalty without involving demand of tax, So where particularly there is only a penalty demand, there is no tax involved, the pre-deposit provisions will still be considered applicable, and that will be equal to 10% of the penalty which is being challenged. 10% of that amount will be required to be paid. Now, of course, there have been few appeals which might have escaped this, but in the times to come, if there is only a penalty which is being challenged under an appeal, there will be a pre-deposit requirement also for such penalty. So under 107 as well as 112, the same thing exists. For the appellate higher authority also, the same thing exists. Now the next thing that we discuss is the first thing that the new insertion possibly now that is also going to happen is on the basis of provision of section 148A for track and trace mechanism of certain goods, track and trace mechanism for certain taxpayers who are handling such goods. So we believe that there will be a notified list of goods, there will be a list of people who are handling these notified category of goods, which will be now required to be tracked and traced through a mechanism of, say, tagging by maybe GPS tagging or maybe RFID tagging, etc., etc. So if you see, a corresponding amendment has been made, as there is something called as unique identification marking, means the unique identification marking referred in clause 2 of section 148A, and includes a digital stamp, digital mark, or any other marking which is unique. Now this is basically to comply with this provision. Now what this proposed provision is, where the government on the recommendation feels that it is necessary to do so, that the persons or a class of person who are in possession of to provide a track and trace mechanism for certain goods, the goods or the persons or class of person handling such goods, the government may in respect of such provide a system for enabling affixation of unique identification marking and for electronic storage and access of information contained therein through such persons as may be prescribed, and prescribe the unique identification marking for such goods, including information to be recorded therein. Now this is again, like there has been discussion about the specific identification and marking of machines for tobacco manufacturers and some specified goods in the pre-GST, I mean in the, beg your pardon, in some previous GST council meetings as well, and even in the previous budget also this was discussed, maybe to expand the horizon and maybe to make some more specification on the basis of whatever the observations have been of the GST department, the anti-evasion department, maybe the DGGI to certain extent, where there is a potential of revenue leakage for category of goods or category of people handling the specific category of goods. This move may be important in order to ensure that such things do not repeat, the evasion of tax can be avoided, and maybe to facilitate a better control. And therefore this provisions regarding the track and trace mechanism are also supported by an insertion of something called as a UIN marking, that is unique identification marking. Likewise, there is a penalty clause which has also been inserted, that notwithstanding anything where any person referred in 148A and fails to comply with the provisions, the contravention of the provision, he shall be, in addition to the penalty under chapter 25, beg your pardon, chapter 15 or the provisions of this chapter, be liable to a penalty equal to an amount of 1 lakh rupees or 10% of tax payable, whichever is higher. So of course there is some there is some devised need felt in order to bring in such a provision, to bring in also the definition of identification marking, and also to bring in a penalty provision correspondingly. So looks like this is going to be one of the new sort of a provision which is going to be backed with the technology more likely possible, and to give a better control and access to the government with respect to these goods and the people handling the goods. And one of the finer changes which has been made again in Schedule 3 to the CGST Act, where what was, earlier in the Schedule 3 entry number 8 to Schedule 3 entry number 8 clause A was mentioning that any supply of warehouse goods before the same has been cleared for home consumption was considered as a Schedule 3 transaction. Particularly, it is known as a bond to bond transfer. Now, in certain practical scenarios, what was being observed, that goods inside an SEZ, which is technically a SEZ, is also technically a bonded warehouse, or a FTWZ, free trade warehouse zone, again technically a bonded warehouse. What happens if a SEZ supplies goods to another SEZ? This was always sort of being discussed, whether it is a B2B supply or whether it is like requiring clearance, because when the goods are sent by SEZ for an export, there is a bill of export prepared or there is a shipping bill prepared and the goods are considered to be exported. If a SEZ sends it to a DTA, then a clearance mechanism for home consumption is required, bill of entry is required to be filed. For one SEZ to another SEZ, although the transaction is of a bond to bond transfer, now a specific provision has been introduced to say supply of goods warehoused in a SEZ or a FTWZ to any person. Okay, it can be from one SEZ to another, one SEZ to FTWZ, vice versa, or to a custom bonded warehouse, which is just a custom warehouse, not SEZ or FTWZ. Any such supply, any such supply of goods will be treated as a Schedule 3 transaction. Means even let's say that there is a supply of goods by one SEZ to another SEZ unit, one SEZ to an FTWZ unit, one SEZ to a custom bonded warehouse, or vice versa, that transaction will also be considered as a Schedule 3 transaction, neither liable for, neither considered as supply of goods nor supply of services. This provision is proposed to be inserted by virtue of entry 8AA. So friends, I think this is what was the this is what was the provisions and the amendments which have been proposed under the GST laws. We have also tried to analyze that this specifically the return based changes may be bringing in some new rules and regulations too, and there might be some changes on the GST portal too which will be brought in. Yes, of course, the biggest takeaway can be the ISD registration. So for those who are not who do not still hold a ISD registration, I believe this is the time that the ISD registrations must be really taken up and the distribution mechanism should be commenced. Although because there was some ambiguity about what is the effective date, and we firmly believe that it should be 1st of April 2025 now that the notified date stands as. So thank you so much for your patient listening. We'll continue to discuss once the say maybe the notifications are in place. Under the customs law also, I just wanted to touch upon a few things. And under the customs law, of course, a lot of tariff changes have already taken place for which the schedule has been issued, and the schedule is already there in the finance along with the finance bill. Under the customs law, the provisional assessment provisions have been relaxed, and the provisional assessing officer is now given powers to complete the provisional assessment within his jurisdiction only, rather than sending it back to any of the proper officer or a jurisdictional adjudicating authority, etc., or jurisdictional officer for that matter. Though the permissibility of what a provisional assessment officer can be doing has been slightly extended and has been eased off, possibly to get a quicker resolution. Also, the mechanisms under the customs to that extent, wherein the pay first and assess later, as the reflection can also be seen under the income tax laws, as today the honorable finance minister mentioned, the similar things are possibly going to happen even under the customs law. Although no more procedural part that we are making a part of this discussion, and with this I would like to conclude my discussion on the budget as far as the GST provisions are concerned, the proposed provisions are concerned. Thank you so much for your patient listening. Jai Hind, take care.